Hey, how's it going? Today is what, Thursday, Feb 26th, 2026. So, what happened in markets today? Not a whole lot if you're indexing passively like I've recommended, but there's a lot going on underneath, as I've mentioned in my previous lives, if you want to check them out. Um, a lot happening underneath, obviously. Some may ask or wonder, how is it that the market or a particular stock or something can decrease even though they've done really, really well? And the answer to that is who the heck knows? A lot of it is based on valuation. Many times you could tell what the expectations are. If the expectations are too high in relation to the results, then that's when you'll see a downdraft in a stock or the market, even though earnings are increasing, so on and so forth. So I am a strong believer in passively indexing. I've been saying this, and I'll continue to repeat it because I think it's just so important for people to understand. I'm not good enough to be able to say and have a crystal ball, nobody is, and say, hey, this is what's going to happen tomorrow. But we're seeing certain things, and I've mentioned it in my previous lives if you want to go check some of it out. And I know it's difficult too because there's long gaps where I'm not saying anything. But we're seeing warning signs, I would say, in certain assets such as Bitcoin, for example. Not doing well this year. It's I've talked a little bit about precious metals. There's certain areas of the market that may be frothy, and this is why I highly recommend folks stay widely diversified in S&P 500 index fund and continuously contribute to that on a regular basis. I've been saying this, I continue to say it because I think it's very important. You don't have to worry about the everyday fluctuations in the market. I know it's boring, but it's profitable. And it's perfect for people who are busy, who have careers and things of that nature. If you're investing in individual companies, you should be doing deep research into the companies and the valuation of the companies. Reading their annual reports, reading their quarterly reports, at least the annual reports. But you really shouldn't be worried about the day-to-day fluctuations. I mean, if you made an investment, you should view it like putting your money in a business for a long time and you can't get it out. So make a wise choice the first time through. So that's my general philosophy when I'm investing. And that's what I've learned from some of the best investors in the world. The market, going back to the market, there's a lot going underneath the surface. Passive investors don't have to worry about it. But I've been saying in my lives, I think this year might be one of the years where the easy money stops being made. There's been a lot of easy money, made from not having to do any analysis whatsoever, not having to put in any work whatsoever, and people just go off their hunches or what other people say or hot tips online. It's just there's a lot of parts of the market that I would say is reason for caution. is reason for caution. And so, but yeah, I mean, nothing to report except if you're getting jittery, just know this is a great time to be indexing in your passive strategy and continuing to contribute to your retirement plan and your IRA or whatever it is, given a certain percentage of your check, right? Whatever it is, the recommendation is 10%. But yeah, other than that, I also go over things that I learned. I don't know if I learned this. I mean, reinforcement of how much people underestimate the psychological side of investing and the human side of investing. When, you know, one of my favorite investors in the world likes to say, be greedy when others are fearful and fearful when others are greedy. This can be applied to the market in general. It can be applied to a particular opportunity. And that to me is psychological. So sometimes you don't know the value of something. It looks expensive, you're not sure. It could or could not be. A question you can ask yourself is, how many people, if I go out and ask 10 people right now what they think about this opportunity, how many people would say they know about it and it's a great opportunity? If you think a big percentage of people know about the opportunity and they're like, yeah, that's going up, just do that survey. It probably won't go up, because it means a lot of people are betting on it. The valuation is high because a lot of people are betting on it. And you as an investor likely are not paying a good price for it. So, and it's just funny. The other thing I've learned is how people cope or react to their own bad calls on TV. Some people just act like new information was the reason that they made the bad call. They just don't even acknowledge the fact that they made a bad call. So I'm learning or continuing to see the effects of how expensive it can be financially for you if you are getting hot tips, if you're excitable and listening to excitable people, pump up this particular stock. Although it's exciting, it can be very expensive for you down the line as far as permanent loss of capital. At the end of the day, if it's like a binary prediction, is it up or down? That's really tough. It's a tough call. But if you look at an opportunity and you're like, hey, not only is this a good valuation, and I think it's a good valuation, but I also am pretty sure it's about a good valuation because if I talk to 10 people today, they won't know what the heck it is. That doesn't mean go and buy some like weird investment. That's not what I'm saying. Because everything listed, I'm talking about publicly listed companies that have gone through the process of reporting to the SEC and things of that nature, where you can find their annual reports, you can dig through their financial statements, you can see the auditor's report and that it's a clean auditor's report. I typically look for an unqualified opinion and strong internal accounting from the auditor. It's basically a clean auditor's report. You can Google that, right? And there are reputable auditors. And for how long has that auditor been on board? So you see me every once in a while dip into some of the strategies I use, or the philosophy. It's more philosophies that I use when I'm looking at individual companies. If that's what you're doing, and I know some people are. Some people may do it, and I've said on my past lives, if if you've tested yourself and you're doing okay, or you have a paper portfolio and you're doing okay, then maybe allow yourself to invest a little bit more capital. But I wouldn't start if you have to risk real money to do it, because you could do it with the paper portfolio as well. If you have to risk real money to do it, I just wouldn't do a lot, you know. And how much is a lot? I don't know. However much you need to put in a portfolio to have a diversified portfolio of 10 to 15 stocks at least. So what? I don't know. You could start with any amount, really. If you, I just I don't like losing money, so if you ask me, it's like don't do any. Just do a fake portfolio for a year if you're not sure how well you invest and how you respond to market conditions. Um, and so yeah, I mean, I have a whole checklist of not just the quantitative stuff. And that's another thing I need to build too. I need to build a checklist of my qualitative stuff as well. But a lot of times I'll ask myself that. I'll say, hey, how popular is this idea? If it's online, if people are saying it all over TV, if it's all over the place, you probably don't have some great valued investment. I mean, so that's I think the underappreciated part of investing. And I think a lot of people get that wrong because it's easy to get wrong. Um, it's not just quantitative. There's a lot of qualitative, and I always underestimate the amount of emotional control you need to have and psychological fortitude you need to have um, when investing. Because I'm human just like everybody else. I'm seeing what everybody else is seeing. If there's a hot opportunity or there's some hot sector or something like that, I'm hearing just as much as everybody else. And I have to tell myself, but I don't, if I don't understand it, I have to constantly tell myself, like, but I don't know what the heck they're talking about. So why does it matter to me? And so to keep that individual mindset, it's tough, and sometimes it feels like you're the only sane one in the room. But you have to trust yourself. Yeah, really, you have to go back to your checklist, quantitative checklist. I'm very quantitative, so I do have a quantitative checklist. And then go through the qualitative stuff as well. And if you've done a lot of work on it, you need to trust what you've done. What do I mean by work? I mean, you've read through the annual reports at least 5, 10 years, or you've at least looked at the research report. I like to use Value Line. Shows 10 years of financials, takes out non-recurring losses, non-recurring earnings, and it gives you normalized, basically, earnings per year. And then I look for owner earnings. Okay, and you can Google what that is, but essentially, I'll have you Google that because it's not just earnings. It's not just, you have to look for recurring earnings and then, like I said, owner earnings. What's left over after you have to invest what you need to invest in the business for you as the owner? That's very important too. So it's not easy. That's what I'm saying. And if you're not, if I mean, you don't want to make it overly complex, but if you're going in and it just seems like it's easy money, there is no easy money. That's what I'm saying. That's, you know, it. If I don't, I hate to say, if it's too good to be true, it probably is. So, I mean, I and obviously this can vary. I mean, just because something goes up or down in a day or two, it doesn't really say much. Um, but in the long run, that's the market is a voting machine. Oh, I learned today. I mean, how precise the market can be with valuation, um, and punishing or rewarding a stock based on valuation in the long run. There's a lot of smart people in the market, and the market tends to get it right in the long run. And I'm not impressed by it or nothing. I I'm thankful that there are people and great investors before us that have written and studied the topic so much and have put out so many resources for us as investors and professional investors like myself or individual investors like yourself to be able to learn more if you want to learn more. This could also be just like the internet, and I've said this before as well, a false delusion into thinking that because you have all this information, you're more informed. You have to differentiate between good, quality information and just noise. And nowadays it can be hard, but there is some good material out there. There is some good books out there. And I've said it before, and I'll say it again: The Intelligent Investor by Benjamin Graham. It's been updated with commentary by Jason Zweig. That's one of the first books I'd pick up and check out if you're interested in investing in individual securities. But no need to reinvent the wheel is what I'm saying. And I don't know. I guess I'm thankful that, and also I guess I am impressed. I mean, nothing like the principles have not changed. The principles have not changed. I guess I am impressed about how durable those principles are. So check that book out when you get a chance if you're interested in that type of stuff. If not, I don't know what to say, but it's fun for me. And I saw these memes about Alyssa Liu and how she inspired people to like play video games again, or like, stuff like that. It's like you got to have fun with it. And that's what I encourage everybody to do, especially young people who reach out to me and they're like, "Dang, like how can I do what you do? Don't do what I do." It's like I never forced myself to do this. You know, I very much had time. Thankfully, I fought for time to explore and see what I like. What did I naturally gravitate to? And this is what I just naturally gravitated to. And it started, I would say, actually with collecting cards, following the stats of each individual player. It probably started even before that. I mean, so just try to take stock of like what you've done in your past phases of life. For example, as a youth, I don't know, for as far back as you can remember, right? I enjoyed going around the neighborhood mowing lawns for money. That was probably my first job, unofficial job. I just went door knocking, saying, "Hey, can I mow your lawn? And will you pay me for it?" And I was like, and I just did that around the neighborhood, and I got paid for it. I'd say my first sales job was selling See's candy door to door to pay for field trips and things like that, because we just didn't have a lot of extra for those things. Us having 9 people in the family, My dad was a social worker. My mom was a working mom, took care of the kids and cooked and cleaned and did all that stuff and worked. And she did nails. So as you can imagine, with 9 kids, and we just didn't have a lot to go around. So you did what you had to do if you wanted to do fun stuff. Like, so to go to Sly Park, I had to raise money, for example. I had to go sell See's candy door to door, and I did very well. Yeah. Um, so in hindsight, you can study like what you've grown, gravitated to, and things like that, and what your strengths are. Another strength of mine is obviously I'm very analytical, so that helps me in this job. Um, so, uh, and I'm not going to say like you tend to have fun with things you're good at. Um, I'm not going to say that because I mean, but just find out what is fun for you and do that. I mean, that's the best advice I have. Um, but that the whole Alyssa Liu, really, I think is just great for people, especially I think the youth and even the Asian American community. It's like I encourage people all the time, like really explore your passions. Don't, you know, if you have to take some time, take some time. Like Alyssa did, right? So a lot of inspiring things and messages, and you know, as people are starting, as people are posting, and even she says maybe right, maybe it is good to take a break every now and then. She took 2 years off and returned and was still top of her sport, which was according to her coach unheard of in figure skating, absolutely unheard of. So she recreated all the rules, and that's why I say only in America, baby, only in America. And I'm so happy for her, proud of her, um, proud of happy for the country, obviously, uh, for getting that medal, the first one in 20 years, and then in hockey, the first one in 40 years. Um, and then for the women's and men's team to win, first time that's happened, both on overtime goals, exhilarating. So, congrats, America. We won big in the Olympics, and hopefully we continue to win big. But yeah, I mean, I go back to Alyssa's story because as far as career advice, because I just think it's so important to have fun with what you're doing. So I'll end it with that. All right, y'all.